Hello friends, hope you are all doing well. If you have silver coins, silver bars, or any silver-related investments in your account, please put down what you are doing for a moment and give me a little bit of your time. Because just last week, something big happened in the silver market. A top-tier Canadian bank, TD Securities, suddenly issued a declaration of war. Not only did they publicly express a bearish view on silver, but they also smashed real money into the market to short it. And the target price they called out is an astonishing $40. This means they're betting that the price of silver will be cut directly in half. Is this just fear-mongering or a precise early warning? Will this storm sweep away all the profits we've made over the past year today? I'll go through this matter with you all and get to the absolute bottom of it. Today's content is very substantial, with extremely high value. So please be patient and watch until the very end. All right, let's get started. Many friends who are new to precious metal investing might not be very familiar with the name TD Securities. Let me first give you a quick rundown. This institution is no small-time roadside investment advisor. It is one of the top banking groups in Canada and in the global commodities sector. That is, in areas like gold, silver, and crude oil. Its words carry a lot of weight. You can think of it like one of the prestigious and righteous sects from a wuxia novel. Their every move often represents the flow of big money from Wall Street, just when we were still immersed in the New Year atmosphere. Still savoring the joy of last year's big surge in silver, TD Securities suddenly dropped a bombshell. This report, I think it is not just an analysis report, but more like a short-selling manual. You could even say it is a declaration of war issued to silver bulls worldwide. Why do I say it is so serious? Because usually when institutions write reports, they always leave some room for maneuver. They'll say maybe, perhaps observe, but this time it is different. This report, personally penned by their senior strategist Daniel Gali, has an exceptionally aggressive stance. Its strategy is exceptionally clear, with absolutely no ambiguity. Let's take a look at how exactly they're planning this air raid. Behind every one of these numbers is a game of real money. First, the entry point. They've already established a large number of short positions in silver futures at the price of $78 per ounce. Here I need to pause for a moment and explain to our friends what short selling is. This is different from us going to a jewelry store to buy gold jewelry. When we buy gold jewelry, we hope its price will go up. That is called going long. But short selling is like borrowing a basket of eggs from your neighbor. The current market price is $10 an egg. So you sell the eggs first and get the money. What are you betting on? You are betting that in the future, eggs will drop to $5. When the price drops, you then spend $5 to buy back the eggs and return them to your neighbor. That $5 price difference in between is what you've earned. TD Securities is doing this right now. They're betting that silver will plummet. Secondly, and also the scariest thing, is their profit target price, $40 per ounce. Friends, do the math in your head. The price is still high right now. If it really drops to $40, this means the price will be cut in half. This is no longer a simple correction. This is predicting a silver market crash. A prediction of this magnitude is very rare in reports from top investment banks. Of course, all investments have risks, so they also left themselves an out, setting the stop-loss point at $92. In other words, if silver rises instead of falling and breaks past $92, they will cut their losses and get out, and won't fight it to the bitter end. As soon as this report came out, what was the market's reaction? You could say the effect was immediate. On the very night the report was released, silver, which had been fairly strong, suddenly deflated like a punctured balloon. Its spot price at one point plunged by more than 5%, directly breaking below the $77 mark. Even its big brother gold was dragged down for a tumble, and the entire precious metals market was a miserable sea of green. This is the power of the narrative. The moment the big institutions speak up, market confidence is shaken. What is more intriguing is that the exchange's reaction was even faster than the markets. Just 2 nights later, the Shanghai Futures Exchange issued a notice overnight. They did 2 things. First, they issued a risk warning, telling everyone that the market was highly volatile and to be careful. Second, they directly changed the rules of the game. They limited the number of new positions everyone could open each day, and also widened the price limit range to 16%. And the margin ratio was also increased. What does this mean? It means that even the regulators at the exchange had a premonition. A huge storm might be brewing. To prevent the market from spiraling out of control, they had to take preventive measures, even putting up guardrails. Some of you might ask, why is this TD Securities being so bold? Aren't they afraid of being wrong and losing money? That brings us to a story from the past, which is also why the market is paying so much attention this time. Actually, this isn't the first time TD Securities has shorted silver. As early as last year, that is, in October 2025, when silver had just broken through $50, they had tried to enter the market and short it once. And the result, that silver bull market was too ferocious. It just rolled right over them, and they ended up losing about 2.4 million US dollars and left with their tails between their legs. It is precisely because of the lesson from that failure that this time they've made a comeback with a more ruthless target and a more aggressive strategy. It is obvious that they've thought it through carefully, and there is even a hint of revenge. What kind of trump cards are they holding that makes them dare to challenge the strong silver bull market again? This is the core of what we're going to break down in depth for you. In today's video, before interpreting the logic of the institutions, I'd like to ask everyone to calm down a bit, step away from the K-line charts you stare at every day, and let's take a higher perspective to look back at these crazy times we just went through. The year 2025 for silver investors was definitely a year for the history books. If you bought silver in that year, even if it was just a little bit looking back now, the return on investment might be even higher than many tech stocks. The full year gain was close to 150%. What does that even mean? This means silver increased 1.5 times in 1 year. This kind of market trend has been exceedingly rare in the history of the past few decades. I believe many friends have probably gotten a taste of sweetness in this market rally. Some friends might have used this money to get a new car, and these are all things to be happy about. But we have an old saying, the moon wanes after being full and water overflows when it is full. In the investment market, there is no asset that can keep rising forever without ever looking back. Entering the spring of 2026, although the price of silver was still at a high in the 70s and 80s of US dollars, and even once approached the historic high of 84 US dollars in early January. But as an old veteran who has been knocking about in this market for many years, the most obvious signal is that the $80 mark is always unstable. Just think back. In the first week of January, the price had just touched $84, and like it got an electric shock, it immediately saw a cliff-like drop, falling over 10% in a single day. This kind of violent fluctuation is like an EKG suddenly going haywire. For investors like us who seek stability, our hearts really can't take it. This phenomenon tells us the disagreement in the market is huge. A lot of people want to sell, and the bulls are running out of steam. Every time the price surges, there are massive profit-taking sell-offs. So, do the reasons that previously supported silver these reasons all sound pretty solid? The reason this report from TD Securities could shake the market isn't because it shouts the loudest, but because its logic is tight. It is not based on guessing, but on data and rules. The first killer move, the butcher's knife of rules, index rebalancing. This point is very professional, and it is also an undercurrent that many retail investor friends most easily overlook. But I'll use a very simple, everyday example to help you all understand. Have you guys ever bought a mixed vegetable pack from the market? For example, a bag has carrots, green peppers, and onions. Let's say the seller has a rule that the bag must maintain a certain nutritional ratio. If the price of carrots skyrockets this year, to maintain the ratio, wouldn't the seller have to take some of the carrots out and replace them with other, cheaper vegetables? In the international financial markets, there are many of these assorted vegetable packs, which we call commodity indices. Globally, there are hundreds of billions of dollars in passive funds that are dead set on buying according to this index. At the beginning of every year, usually in January, these indices have to undergo an annual weight rebalancing. TD Securities pointed out that this year, from the 8th of January to the 14th of January, is precisely this key rebalancing period. And in this rebalancing, the protagonist is silver. Because silver rose too much last year, its weighting in the index has become artificially high. According to the rules, the index must cut it back. What does this mean? This means that regardless of whether fund managers like silver or not, regardless of whether the fundamentals are good or not, these hundreds of billions of dollars in funds must, within this week, mechanically and forcibly sell off silver. According to TD Securities calculations, the scale of this wave of passive selling is as high as 7.7 billion US dollars. Friends, 7.7 billion US dollars. What does that even mean? This far exceeds the single-day trading volume of any silver ETF in the past. Such a massive amount of sell orders, smashed into the market regardless of cost, is like a reservoir, suddenly releasing floodwaters. How could the downstream water level not plummet? This is the first source of TD Securities' confidence. They calculated that someone would be forced to sell, and it is an open hand, completely unavoidable. This is a technical decline, but its destructive power is immense. The second trump card, extremes will reverse. The side effect of high prices, the second logic returns to the simplest truth in economics. If something is too expensive, no one will buy it, or people will find ways to use it sparingly. We've always said that the AI and photovoltaic industries need silver, and this is an essential need. That is right. But business owners also have to do the math. When the price of silver is $20, they don't feel the pinch using it. When the price of silver rises to $80, the cost pressure is just too great. What happens then? Engineers in the factories will start researching, can we use a bit less silver? Can we plate it thinner? Or can we use copper or aluminum to substitute for silver in industry? This is called the substitution effect and the conservation effect. Research from TD Securities found that many price-sensitive downstream companies have already started reducing their silver orders. This is what is known as high prices inhibiting demand. On the other hand, high prices will also stimulate supply. If you have some old silver jewelry at home, seeing how good the prices are, now, don't you also feel like taking them to a silver shop to sell and cash in? This is recycled silver. When prices soar, silver from old silverware and electronic waste from all over the world will be extracted and returned to the market. This implicitly increases the supply. There is also an unexploded bomb hanging over our heads: tariffs. Although the US Supreme Court recently made some pro-trade rulings on the tariff issue, and everyone thinks the Trump administration might not impose more tariffs. But as long as there is a hint of uncertainty about this policy, the large amount of physical silver sitting in US warehouses could flow back into the global market to avoid taxes or for arbitrage. More importantly, data shows that although there have been cries of a silver shortage in recent years, the deficit is actually shrinking. The supply-demand deficit for 2025 has already narrowed to 118 million ounces. Once demand cools down due to high prices and supply increases due to high prices, that story of demand outstripping supply might not be tenable anymore. Once supply and demand reach a balance or even a surplus, the price support will collapse. The third killer move, the party's over. Smart money is pulling out the last logic, and also the one we can most easily relate to, is market sentiment. To all my friends here, think back. Recently, haven't you heard people talking about silver even when you are exercising in the park or buying groceries at the wet market, when even the neighborhood auntie who doesn't trade stocks is asking if they can still buy silver? It is often a signal that the market is peaking. This is the famous shoeshine boy theory. TD Securities believes that the crazy surge in 2025 has already attracted too many speculators. This market is too crowded now. Everyone who is bullish has already bought in. So who is going to take over next? Without new buyers, the price can't be pushed up. Moreover, data doesn't lie. We see that data from the US Commodity Futures Trading Commission. CFTC shows that as of the end of 2025, a lot of smart speculative money, what we call the main force, has actually been quietly retreating. The net long positions in the futures market are decreasing significantly, having fallen by more than 7,000 lots within a week. What does this mean? It means the big players are already taking profits, dumping their chips onto retail investors. The technical charts are also showing severe signs of fatigue. The price can't rise anymore. A slight drop triggers a stampede, and the bull's confidence has been shaken. TD Securities believes that silver's upward cycle has come to an end, and what follows will be a long, painful trend reversal. Combining these 3 points, forced selling pressure from the rules, a reversal in supply and demand fundamentals, and the receding of sentiment, TD Securities believes that these 3 forces combined are enough to knock the silver price from the clouds down to the ground. And the $40 target price is by no means unfounded, speaking of which, I know many friends in front of the screen are probably feeling very anxious. Their hearts pounding, oh no, should I sell the silver coins I am holding right away? It is over. It is over. Are my funds going to shrink? Since the bank says it is going to fall, should I also follow them and short it to make big money? My friends, don't panic just yet. Take a deep breath. When we invest, the biggest taboo is to believe every rumor you hear and lose your composure. The institutions have their own calculations, and we have our own way of surviving. Although TD Securities is a major firm, they're not gods. And what they say isn't necessarily a holy decree. Let's objectively analyze the other side of this showdown. First of all, TD Securities' dark history. Does everyone remember what I said at the beginning? This isn't the first time they've shorted silver. In October 2025, they confidently shorted it once, but ended up getting slapped in the face by the market, exiting with a loss of $2.4 million US. What does this show? It shows that institutions can also be wrong, and institutions can also stumble in the face of a trend. Although they are better prepared this time, the market is ever changing, and no one can guarantee that history won't repeat itself. Secondly, the strong buying power is still there. Although speculative funds are retreating, there is a super buyer still in the game, and that is the central banks of various countries, especially the People's Bank of China and the central banks of other emerging market countries. Data shows that the value of gold assets held by global central banks is already approaching $4 trillion US. In order to diversify their assets and to counter the hegemony of the US dollar, their buying of precious metals is very resolute. This kind of national level buying is often the market stabilizing force. If silver drops deep enough, it is hard to say these national teams won't enter the market to pick up a bargain. Furthermore, the geopolitical variables. We are now in a turbulent world. The situation in the Middle East, the Russia-Ukraine issue, the great power games, any single spark could ignite risk, aversion sentiment. Once the world descends into chaos, gold and silver, as safe haven assets, could see their prices make a V-shaped reversal at any moment. This is a variable that cannot be calculated in TD Securities' report. So then, facing this battle of gods, what on earth should we, the ordinary retail investors, do? I'll give everyone 4 pieces of advice. First piece of advice, by all means, do not blindly chase the highs. If you don't have any silver on hand right now, or your position is very light, and you are getting jealous seeing the high price and want to rush in, I'd advise you to hold on a bit. At this position, the risk-reward ratio is very unfavorable. It is like having already reached the mountain peak. The air is thin. It is hard to go any higher, but it is very easy to fall down. It is better to just wait and see. Wait for this wave of institutional selling pressure to pass, and then decide what to do when the situation is clearer. Second piece of advice, strictly set a stop loss. If you are holding paper silver like silver futures, ETFs, you must set a proper stop loss point. Don't have the mentality of just treating it as savings if you are stuck in a losing position. Futures are leveraged, and the volatility can be deadly. If the price breaks below a key support level, you've got to run when it is time to run. As long as the green mountains are there, you won't have to worry about having no firewood. Don't let the profits you've made be spat back out. Third suggestion, don't rashly follow the trend and go short. Although TD Securities is shorting, I strongly discourage my ordinary retail investor friends from trying to short sell. Why? Because short selling is very technically demanding and the risk is infinite. Silver, this product is extremely volatile and is known as the devil's metal. A single piece of news could cause it to instantly spike to its limit, directly wiping out the short sellers. We don't have that informational advantage and capital advantage, and it is easy to get squeezed by both bulls and bears. When we invest, we are seeking stability, not gambling. Fourth piece of advice, distinguish between investment and speculation. This is the most important point. If you are buying physical silver coins and bars with the mindset of passing down wealth and hedging against long-term inflation and keeping them in a safe at home, then you don't really need to worry too much about short-term price fluctuations. Even if it drops to $40, it is still silver. Its industrial value is still there, and its monetary properties are still there. As long as you didn't buy it with borrowed money, and as long as you are not in a hurry to cash out, time will be your friend. In the long run, precious metals are still an important tool for preserving assets. But if this is money you are using for speculation, now is indeed the time to consider taking profits and securing your gains. Outright after saying all that, I really just want to tell everyone one thing. The market is always right, but predictions aren't necessarily right. This grand drama of the bull-bear showdown has only just begun. In the coming 2 weeks, or even the first half of this year, the silver market is destined to not be calm. The report from TD Securities is a wake-up call, reminding us that risk is here, but maybe it is also an opportunity for us to re-examine our own investment portfolios. I'll be like your eyes, always helping you keep an eye on the market's every move. Whether it is the latest moves from institutions, key turning points in the market, or even where to find a good safe haven. I will be the first to share it with everyone here to help you see through the fog and protect your money. So please, everyone must remain rational and patient. Don't get carried away by the market's frenzy, and don't be scared out of your wits by panic news. Okay, that is it for today. If you feel that today's in-depth analysis has helped you see through the fog of the market and put your mind at ease, please don't forget to hit that like button for me. That is the biggest encouragement for me. Please also subscribe to our channel and share this video with friends around you who are also worried about their finances. We will continue to be here to be the lighthouse on your path to wealth, helping you watch over every storm and surge. No matter how the world changes, I hope everyone can eat well, sleep soundly, and be able to laugh. I am your old friend. See you in the next video, and I wish you all peace and safety.